We want to welcome Amanda Sharratt back to the program from Your Wealth Financial Solutions in Medina. Good morning, Amanda. Welcome back.
Good morning. Thanks for having me back.
Hey, it's great to have you back here. We were talking about not the topic we're going to talk about today while we were off the air, and I might just touch on it at the very end, okay?
Okay.
But today we've got what I would consider a post-tax season to-do list. Is that fair?
That's fair.
Okay.
Yeah.
All right.
All right, I'll kick us off with to-do list item number 1. Consider whether you need to adjust your tax withholdings. Ooh.
Yeah, this is a good one right after tax season because you really can determine that based on your tax return. So did you owe a lot or did you get a big tax return back? And people like to get a big tax return back because they feel like it's a bonus. And while I can understand that, I'm really of the opinion that if we are going to be good stewards of our money, let's do it all year long. So let's not let the IRS hold it all year.
I was going to ask kind of the follow-up on that because I have learned over time that if they keep your money and give it back to you, that gives them the ability, the government, the ability to use your money for free. When wouldn't it be better if we had the ability to use our money during that time period?
That's correct.
Okay.
That's my opinion. And so I think it's really good to look at that. And because we also don't want to owe a lot. So you get into this kind of tricky situation where you want to come really close to breaking even, which can be hard. But I think if you work with your tax professional, if you used a professional, they can help you with what your withholding should be. And if you did it yourself, that's fine. There's a free calculator on the IRS website. So you can just go on there and put in your information and see what your withholding should be.
Amanda Sharratt with us. She is the CEO and financial advisor with Your Wealth Financial Solutions in Medina. Monthly guest now here on Heartfelt Mornings. Okay, old employer retirement plans. I've got one of these that is hanging out there. Should I drag that over to where the rest of my money is?
You probably should. Yeah, this is really common too because people will leave a job and there's so much that goes into when we switch employers, right? We're figuring out the job, we're figuring out the routine, and then we forget about that employer plan. And what that probably means is you forgot to log in, check the funds, rebalance it if you need to.
Guilty.
Yeah. Okay. So it's really good to roll it over, consolidate it, get it with the rest of your funds so that likely you have access to better funds there. And if you're working with a professional, with a financial advisor, you have access to better advice then too on that money.
Mm-hmm.
Wow. Okay, so number 3 on this this list here is, do you have life insurance? If so, is it enough? You know, I'm young. You know, I'm pretty much indestructible right now. Why do I need life insurance? I don't have anything to insure anyway. So.
Yeah, well, that's right. So we all think, like, we don't want to think about the worst thing happening. But financially, that's where I talked about clients with it. I'm like, you don't know when it's going to happen, right? Mm-hmm. None of us know. And so it's really important to make sure that you have the life insurance if somebody is counting on you for your income is the biggest thing. So financially speaking, you don't want them to be grieving and also figuring out how to pay the bills, right? And so you want to make sure that they have enough coverage on you for long enough, which is typically, if you have children, until they are out of college, probably. Because let's be honest, like, even when they're an adult, if they're in college, they still need us financially, right? And so we want to make sure that you have enough to cover you for long enough that everybody will be okay if something happens to you, financially speaking.
Well, I got nobody relying on me yet, so.
There you go.
Yeah.
There you go.
Okay, but there are 2 kinds of life insurance, too. Preference? One better than the other?
Yeah, typically because I follow the Ramsey baby steps and I help clients with that, I say do term life insurance because if you're going to get out of debt and you're going to build wealth, there's going to come a point where you likely won't need life insurance because you'll have enough of your own assets. You won't have a ton of debt. And so that's why I say term, because you probably only need it for a term. But I do always tell clients, life insurance is the cheapest yesterday, right? The younger, the healthier we are, then it's cheaper. And so it's really a good idea to go, okay, how long do I really think I'm going to need this for the longest term? And then you can always cancel it later if you don't need it for that whole term. But if you decide you do need it longer and you don't have it, it's going to be more expensive probably to go ahead and extend that term.
Mark, I'm learning things.
Oh, you know what I can't understand is how does Amanda know that these questions are all personal to you and me? Okay, because the next one down the list is, do you have an estate plan? My answer to this would be yes. Wendy and I do. Pull it out and make sure it is still current. Thank you for that, because there are some updates we may need to be making very soon.
Yeah, usually if there is a big life change, that's when it's like, definitely look at it, right? And that means if you're getting married, if you're having kids, if your kids are becoming adults, if they're getting married, those sorts of things, you're probably going to want to look at your estate plan. And if you don't have an estate plan, so let's back up and say an estate plan is a will or a trust, right? It is really, let's just say, what are your final wishes if something were to happen to you? And I always say that that's the final way to say I love you to your loved ones, right? Because that is the time that they're grieving and they want to do what you would want them to do. And if you don't have that written out, they don't know. There's no way for them to know what you would have wanted. And so it's really important. And if you have children, you don't want to think about it because you don't want to think about anybody else raising those children.
Right.
But really, you should be the one deciding if something did happen, who will help raise those kids.
A few years ago, when we last made our adjustments, I did make a phone call to my sister and to my brother-in-law and say, since our daughters are all 30 years old or older now, I don't think you need to be their legal guardians anymore. Is that okay? And they were in agreement that at that point, no, it didn't need to be any longer. But yeah, we've got a grandkid adjustment that I think we're going to need to make in the will and trust area in this next year that we haven't made in the last couple of years. And I think it's basically because of neglect.
Yeah, well, and we can almost feel like we checked that box and we did it, but it's like, let's pull it out and make sure it's still updated and look at it. And because you may not be like, oh, I forgot about that, or the relationship changed, so you just want to make sure that it's still accurate.
I've never thought about making a will before. I should maybe get on that too.
Yes, that one you definitely should. Yes.
Yeah. Huh. Well,
look at what you're learning today, Birch. Come on,
isn't that crazy? So next, we're going back and forth between what Mark and I need to be doing. And number 5 is calculating our net worth. And, folks, I've already done it.
Great.
I got $20. There we go.
That's great. Yeah, so calculating your net worth. If you're working with a financial advisor, they're likely talking to you about this. But you can also just simply do it with a spreadsheet. I think it's important to just, and your net worth is simply put what you own minus what you owe, right? Assets minus liabilities. And so really just figuring out, what is your net worth? Because I'll be honest, when my husband and I, when we first got married, we had a ton of debt and our net worth was negative. And so to see it go from that into what it is today, it's really nice to keep track of that. And then that's really your way to know you're making progress and you're working towards your goals.
Okay, last on the list, actually, this is one we've taken care of at our house already. So this is just for the edification of everybody listening. Make a plan for summer spending. Upper Peninsula, 7 weeks from now in Michigan, cared for, all set.
Great.
What about for some other folks?
Yeah, obviously, like you said, vacation, that's a big one. Let's make sure we're planning ahead for that. But everything else that goes into summer can be really expensive.
True.
So just all the little trips. If you're in my family, we love a lot of trips to the local ice cream shop, right? And that can add up.
There you go.
Wouldn't you know it?
Yeah. And so even just those small things can add up. So you want to make sure you do those things. Summer is a great time, but making sure that you have a plan ahead of time. And so really just a budget. We should be doing a budget every month, but just ensuring that you have room in your budget, in your plan to have fun this summer, whether it's vacation, concerts, fairs, whatever you want to do. Make sure you're setting aside money now, and you'll be thankful that you did in the summer. Your future self will thank you.
Yeah, going into debt over numerous ice cream runs would be kind of goofy.
Don't do it. Yeah, don't put that on your credit card.
Oh,
no.
I recommend.
Okay, Amanda, thank you for being here. And before we let you go, I want to ask about last month, because last month was hard, and I'm sure it was for you as a financial advisor with the way things were going. With tariffs with a capital T and all of that. So you were telling us off the air, your job description kind of changed. From what to what?
That's right. From a financial advisor to a counselor. Now, I'm not a licensed counselor, but I can only imagine that is what the conversations that they have.
Let's just say you were getting phone calls and emails of very concerned people.
Yes, because the market likes certainty, and we have
Sure.
not had much of that recently, right? And so and people, we like things to be certain, right? And when you're nervous and you're seeing your retirement accounts fluctuate, it really builds up emotions in you, and you can get nervous. And so it's really, I just remind people, like, when we do a financial plan, when we make the right investment choices, we're doing that for your long-term goals. We really put in a lot of work in the beginning to say, where are you now? Where are you headed? And make sure you have the right strategy so that when things like this happen and the market is volatile, we don't need to make drastic changes, and we shouldn't at that time.
Amen and amen. Amanda Sharratt, CEO and financial advisor, Your Wealth Financial Solutions in Medina. Amanda, if people want to find out more about what you do and where and how can they find that out?
My website would be the best place, so it's yourwealthfinancial.com. And I actually did write an article relating to these topics today, so if people want to go on and get a refresher, it's on the Knowledge Center on my website.
Thank you, Amanda.
Thank you.
Always great to see you. We'll see you again in May.
Okay, sounds great.
All right.